Hello. The company being analyzed today is Sigachi Industries. This is a company which forms, it's an important part of the pharmaceutical industry. And today we're going to analyze its financials, what the company actually does, its balance sheet, and maybe even future plans, along with cash flows. So let's take a look. First, we have the market cap, 1,638 crores. This company is a small cap company, okay? Current price of one share, 42.9 rupees. Book value per share. What is book value? Book value is assets of a company minus liabilities of a company. So net assets of a company, book value. So book value per share is 15.7 rupees. So current price is more than twice book value. The price to earnings ratio is 21.5. Okay. The ROCE, the return on capital employed, is 15.5%, which is all right. That's all right. Return on equity is 13.5%, which is also all right. Uh, Return on equity, return on capital employed are important metrics to measure efficiency of a company. How efficiently does a company use its assets, its capital, all that. So let's take a look at its profit and loss. Here we have data from 2018 all the way to 2025. This is all from screener.com. All these figures are in crores of rupees. So here we have sales, we have operating profit, we have profit before tax. In tax percentage, you can see the effective tax rate, what it's paying. And finally, we have the net profit, very important figure. So in 2018, we had sales of 101 crores, operating profit 12, and OPM, operating profit margin, 12%. Operating profit and EBITDA is same. Let's jump forward. 2021, sales of 193 crores, operating profit of 39 crores, 20% operating profit margin. Okay, let's move forward to 2023. Sales of 302 crores, operating profit of 59, 19% operating profit margin. And finally, we move to 2025, 488 crores of revenue, almost 100 crores of operating profit, 20% operating profit margin. Let's go a little down. 92 is the operating, sorry, the profit before tax, my fault. 92 crores is the profit before tax. And finally, we have a profit after tax of 70 crores. My nose. So operating profit, sorry, profit after tax of 70 crores. So we can see there has been a substantial growth, a very noticeable increase in sales as well as profits. So let's look at all these in percentage forms. Okay, in the form of compounded percentage. Here we can see. Now we don't have 10-year data. Okay. So last 5 years, the compounded sales growth has been 29%. Last 3 years has been 25%. Last 12 months, TTM, TTM is trailing 12 months. The last 12 months, 27% growth in sales. Profit growth has been 28% over the last 5 years, 20% over the last 3 years, and trailing 12 months, 28%. So massive sales growth, massive profit growth, and profit growth has kept in line with sales growth. All right. Then return on equity was 15% 5 years ago, 11% last 3 years, and last year was 14%. So, uh, okay, that's all right. Fine. Finally, if you want to take a look at this, this is cash flow from operations. Cash flows are very important part of evaluating any business, maybe even the most important part of valuing any business. So cash flows from operating activities. Let's take a look only at the top figure. March 2018. So 2018, 8 crores. 2021, 30 crores. Cash flows from operating activities. But since 2021, cash flows have fluctuated and the highs have remained the same. Last 5 years, the company has not seen any growth in cash flows, or let's say last 4 years, and very fluctuating cash flows. So even despite massive profits, massive increase in pure profit, the working capital that the company requires, the working capital, the cash actually used up in the company's operations to pay employees, to pay suppliers, all that, the cash tied up in the business has become so high that cash flows have remained stagnant. So the company is in expansion phase. Maybe that's expected, but yeah, that can be seen as a negative, that cash flows have essentially remained the same. So now let's see what the company actually does. Oh, wrong slide. Fine. All right, all right. The company has been around for quite some time. Hmm. Okay. So here you see a word. Okay. This is the main product, MCC production capacity. Now this is in metric tons, and you see 22,000 metric tons of production of MCC. MCC, microcrystalline cellulose. This is the main product. This contributes to 80 to 85% of revenue. Then we have API, which is active pharmaceutical ingredient, 100 kiloliters of production capacity. Let's just briefly cover what these products actually are. Best way, Google. Okay. So here it says microcrystalline cellulose. Okay, microcrystalline cellulose, basically for any drug, for any tablet, for example, it's just a part of the tablet. For making that tablet, it's a thing used. Okay, MCC. It's important because here it says one thing, okay? It helps hold the tablet ingredients together. So whatever ingredients, chemicals, components are used to make a tablet, for holding all those components together, MCC is very important, or it's required. Then disintegration. It helps tablets break apart quickly in the body, which is important for drug release. Then stabilizer. It helps maintain the overall stability of the tablet formulation. So for medicines and tablets to remain stable, to disintegrate quickly in the body, all right? And making sure that the tablet is actually a tablet. The components of the medicine actually remain together. So that was MCC is, microcrystalline cellulose. It does. So it's important. It says it's a widely used excipient. Excipient component. Okay, we covered MCC. This covers 85%, 80 to 85% of Sigachi's revenue. Then we have API. API is known as active pharmaceutical ingredient. Simple definition. A very simple definition. It refers to that part, that component of a medicine which produces the desired therapeutic effects, such as treating a disease or relieving symptoms. So we take a medicine for treating some disease, the part of that medicine which is responsible for treating the medicine, so treating the disease, is the API, the pharmaceutical ingredient, and all other components of the medicine just help the API. These are not non-active pharmaceutical ingredients. So we covered API, okay, small part of its revenue. We already covered MCC, big part of its revenue. So we know what it actually does. The two big portions of its revenue, it manufactures MCC, and it's one of the largest manufacturers of MCC in the country. It claims so. My nose awful. 22,000 metric tons, all right, and 100 kiloliters of API production. This is a new thing. This is a new thing. Let's just move down. Yes. Now, here we can see they have different manufacturing units, and this unit one, Hyderabad, Telangana, they recently had a fire. So that's a big news. They recently had a fire. Uh, that's all I had to say. Okay. So we have unit one, Hyderabad, Telangana, product again, MCC, microcrystalline cellulose. Installed capacity and production volume. Okay, installed capacity 6,400 metric tons. I hope that's it. Metric tons per annum. Is it metric tons? Yeah, it metric tons per annum. Production volume, how much it actually produces. 6,322 metric tons per annum. Capacity utilization is 98%. 90% of capacity is utilized. Then in this plant, okay, installed capacity 6,900 uh, metric tons per annum. Capacity utilization 85%. Then this plant, which is even larger, 8,400 installed capacity utilization is 85%. So 85 to 98% is the capacity utilization. Then we have nutritional mix, product of nutritional mix, interesting. Installed capacity 12,000 metric tons per annum. So I don't know what this means. Could be a new product. Maybe we'll check it out in Google later. Then API, you already saw this, 100 kiloliters production. So these two things must be pretty new because they have not mentioned production capacities and all that, the actual production volume in this. Okay, moving on, we have this business verticals. Here they have explained it. Let's read under the black. Sigachi Industries stands among the world's foremost producers of microcrystalline cellulose. So, product, one of the largest producers. Then, important, this product, MCC, is used across pharmaceutical, even food, even nutraceutical, and even cosmetic applications. We already saw that binder feature of MCC, where binding the components of a tablet together. So even in like cosmetics and food, this product can be used. So important thing we can learn, this product has use across various industries. Pharma is already a big, cosmetics is already a massive industry. Food, I don't know what's nutraceutical, but four industries have been mentioned which are massive. So massive markets for this product. Then here, under me, it's written, its MCC business is a cornerstone of revenue growth and global market leadership. All right. So, cornerstone for its revenue growth, MCC, again, 85% of revenue. Then, APIs, we covered active pharmaceutical ingredient. Here it says, Sigachi Industries has accelerated its entry into the active pharmaceutical ingredients sector to the strategic acquisition of 80% stake in Trimax Biosciences in 2023. All right, all right, this acquisition was made. Then Sigachi aims to broaden its product portfolio and ascend the pharmaceutical value chain by introducing value added high margin APIs. All right, margin adding. Okay. And finally, we have O&M, operation and maintenance. This is the third business segment, contributing to around 8% of revenue, 7 to 8%. O&M is operation and maintenance, another exciting source of revenue. Okay. Now, Sigachi Industries O&M division specializes in overseeing facilities in the fields of specialty chemicals, petrochemicals, water treatment, and pharmaceuticals. Utilizing their manufacturing expertise, Sigachi secures large scale contracts with major industry players, guaranteeing high standards of efficiency and quality. As a result, Sigachi is broadening its presence in India's chemical industry, and revenues are projected to increase moving forward. A nice guidance given, revenues will increase from this division. So, overseeing facilities. So there's a facility for, let's say, a chemical plant facility, water treatment facility, pharmaceutical facility, specialty chemical facilities. They can operate that facility. They can look after the facility, and company whose facility it is, they will pay Sigachi. That's the third revenue segment. So summary, they sell MCC, they sell API, and third major segment is operation and maintenance of other companies' facility, especially chemical sector. All right, all right. So overall, as of fiscal year 2025, okay, 84% of revenue came from MCCs, 6% came from APIs, 8% came from operation and management. Okay, it's management, not maintenance. My fault. So they won't be, I guess, maintaining the facility. They will be making sure it's operating efficiently. A plant is operating efficiently. Okay. And 2% comes from others. So these are the revenue contribution from the various segments. Moving on, expansive presence. Okay. 3,214.17 million rupees came from exports. That's around 321 crores of revenue came from exports only. 34% growth in exports fiscal year 2025 as compared to fiscal year 2024, and 65.8% of revenue of this company came from exports. So majority of revenue came from exports. So export market already has a major presence of its revenue in exports and relies a lot on the international market. So international markets are very, very important for the company. Here you can see the various countries. Right? We have the whole of the Americas. We have we have Russia, we have even China. I shouldn't have said even China. Okay, Europe, we got many parts of Asia, Australia, and all. So present in many different countries. Then here we have some financials. It's already given. These are in millions of rupees. We have already seen these, but we can take a slight look. Here you can see revenues have increased sharply. Here we have seen EBITDA or operating profit, same thing, increased sharply. Now this revenue, so it's revenue from operations. Okay. Then we see profit before tax increased sharply, profit after tax increased sharply. Cash flow from operations, again, we saw this already, not really increased sharply. Then net worth, assets minus liabilities, increased sharply. Okay. EBITDA margin, consistent 20%, 22% EBITDA margin or operating profit margin. Profit before tax margin, a slight decline from 20% to 18%, but consistent at least last 3 years. Profit after tax margin, okay, 15, 14%. A slight decrease in profit after tax margin from 2023 to 2025. Net debt to equity. Okay, important. Now, what is the net debt? Net debt is total debt minus cash and cash equivalents of a company. Now, this as a ratio, when okay, ratio to equity, it's currently around 0.04 times of equity or 4% of equity. Okay, so net debt as a quantity amount is 4% of equity, which it sounds good. I guess so. It sounds good. Oh, I should be here. Okay. Here we have their gross block, which is the gross, I think, assets. Um, okay, the value of gross assets is 3,542.84 million, 354 crores of gross block, gross assets. Then the ambition is 25% revenue growth over 2 to 3 years and 80 to 90% utilization in added capacity. Okay, 25% annualized revenue growth over next 2 to 3 years, 80-90%. Nice. Moving on, let's take a look at the company's balance sheet. Here we have the company's consolidated balance sheet. All these figures are in lakhs of rupees. They're mentioned, okay, at the top. Lakhs of rupees. So let's take a look. This is for fiscal year 2025, not latest quarter, but fiscal year 2025. Now, I have marked here total non-current assets. Non-current assets, assets which cannot be converted into cash within 1 year. Total non-current assets is around 45,188.49 lakh rupees. So 450 crores of non-current assets. But when we come to current assets are assets which can be converted into cash within 1 year. Okay. Total current assets are 39,432.65 lakh rupees, 394 crores. So its current assets are actually very close to its current liabilities. Sorry. Its current assets are actually very close to its non-current assets. All right, current assets very close to non-current assets, which is interesting. Then under current assets, you can see this trade receivable, and you can see this cash and cash equivalents. So cash and cash equivalents, assets which can be converted very quickly into cash. Very liquid, the most liquid assets. Very small component. Okay, this comes out to only 1,728.44 lakh rupees, only 17 crores of the 394 crores current assets is in cash and cash equivalents, while 183 crores, 390 crores of current assets are in trade receivables. If you're wondering what trade receivables are, basically many businesses, when they provide products to their customers, they don't take payment right away. They will take payment after, let's say, fixed period of time. For 30 to 60 days, they will give their products on credit and get the money back after 30 to 60 days. So the money that they're supposed to receive from their customers is trade receivables. So the company doesn't have a lot of cash. It relies very heavily on trade receivables, okay, other bank balances, which is a nice 54 crores. I ignored that. I didn't notice that first. And inventory. Inventory is raw material, finished goods, plus goods still being manufactured and all that. So that was current assets. Keep a mind on the figure, okay? 394 crores current assets. We move down, we see total non-current liabilities, very small, only 48 crores worth of non-current liabilities. Wow, compared to like how much was that? 400 crores of non-current assets. So non-current liabilities, very small. Now current liabilities. These are liabilities which the company has to pay back within 1 year. Okay, 185 crores worth of current liabilities. Now, 392 crores worth of current assets divided by 185 crores of current liabilities gives us a ratio of more than 2. This is known as the current ratio. Current assets divided by current liabilities, current ratio. If it's more than 1, nice. If it's less than 1, then it depends on the industry we are talking about, if it's concerning or not. But currently it's 2, which is, I don't know how much, how good for current ratio 2 is for pharmaceutical industry. Then moving on, we saw the balance sheet. We saw a lot of current assets, but a lot of trade receivables, not a lot of cash. We saw a lot of current liabilities, very small non-current liabilities. Okay. Now under this, let's take a look at this. So inventory for fiscal year 2025. Okay, year ending, 32 crores of raw materials. Okay, 34 crores of finished goods, and work in progress goods still being made, 24 crores. Let's see this number. Now you see this 34 crores and 33 crores. Finished goods have not increased a lot, while raw materials have increased a lot in inventory and revenue has increased. So that's a good thing. This is one kind of analysis we can do for companies where we can see if finished goods and raw materials, which is rising faster. If finished goods is rising way faster than revenue for, let's say, 2 to 3 years, let's say 2 to 3 years, that means that how much you are producing, the goods the company is producing, it's not able to sell it as fast as it's producing. This can lead to overproduction. And here we can see sales have increased this year. Okay, fiscal 2025, there was increase in sales. Finished goods have remained same. Raw materials have increased. So more raw materials, which means it can be maybe anticipating more demand. So taking more raw materials to produce more goods. So at least at a glance, only taking a look at this fiscal year's annual report. This is all the annual report. It seems there's actual demand. The goods are actually getting sold. Finished goods are not getting piled up. Okay. Then, uh, what else did I need to take a look at? Yeah. Then, borrowings, borrowings. Current liabilities. Okay, current liabilities. These numbers are all, I believe, in lakhs of rupees. Yes, lakhs of rupees. So under this, in borrowings. These are current liabilities, okay? Paid back within 1 year. We have secured loans from banks. We have unsecured loans from NBFCs and all. Secured loans worth 110 crores. Okay, from bank. Secured, I guess secured by some collateral, some property secures the loan. So if they do not pay back the loan, maybe the property gets seized. Okay. And finally, we take a look at this revenue from operations. Okay. So here we can see 446 crores of revenue came from sale of products, while 41 crores of revenue came from sale of services. Okay. Sale of products, we have exports making up massive amount of revenue, 313.5 crores of revenue. Export is MCCP, microcrystalline cellulose. Others, this can be API and all. Then domestic gain, majority comes from MCCP, 95 crores. Others are a bigger portion here, 29 crores from other products. APIs, most probably, maybe, not sure though. And sale of services, we covered operational and management, 41 crores. Okay. And job work services, um, too small a number, 38.47 lakhs. Okay. So that was the balance sheet. We analyzed some of the revenues. So as a summary, what can we say? Um, as a summary, why don't we look at the latest investor presentations also? There was one stat, I believe, which I can show, but I'm unable to find, which is always a good look. Yes. Mm, yep. Gross block of the company. All these numbers are in millions of rupees. Fantastic. Gross block, number of assets increasing. Total assets. Okay, not net assets, total assets. Massive increase. Then here, we already took a look at net debt to equity. Take a look at interest coverage ratio. Okay. See, interest coverage ratio, this black line, this black line. Interest coverage ratio is EBITDA divided by interest cost. Interest cost, interest paid on borrowings and all that. Very important figure, interest coverage ratio. If it's less than one, it's concerning. More than one, nice. Two, three, four, five, higher the number, the better. So in 2020, interest coverage ratio was 10, very healthy. 2022, it's 45, extremely healthy. Then 13, then 9.8, then 5.5. 5.5 is still healthy, but we have seen a decrease in the interest coverage ratio. So overall, that was Sigachi Industries, one of the largest producers of MCC, microcrystalline cellulose. 2023 made the acquisition of a company for API, expanding into APIs. Operation and maintenance makes up 8% of revenues. 65% of revenues comes from exports, and cash flows are not looking that good. So that was Sigachi Industries.